Good afternoon, everyone, and welcome to our daily Volatility Box report for January 6, 2020. We are TOSindicators.com, home of the Volatility Box. For today's update, we'll start by taking a look at our larger ETF indices, but this time using our new stock Volatility Box tool. So here we'll be looking at the SPY, the Qs, the IWM, the DIA for the Dow. Oh, we have IWM twice, so ignore this one. TLT for the bonds, and then USO for crude. And then we'll go ahead and click Generate Indicator. And now we have two indicator files using both our aggressive and conservative volatility box models. Let's go ahead and download each of these files, and we can import them into Thinkorswim to see where they plot. Now, if we come to our charts, and we'll start with the Russell, what we'll notice is the Russell doesn't breach either side's volatility box zones, which doesn't give us any concrete information, nothing that we can really take to start to build a plan around tomorrow with. However, if we come to, let's say, the SPY, what we'll notice is the SPY did breach that first volatility box edge zone, which means that tomorrow morning, if we start to break above this zone, the top of the cloud, in the first 15 minutes or so, then the SPY is a likely trending candidate for the rest of the day, right? And now if we bring this over to the Qs, we see something similar, and on the Qs that level is closer to 216.50. And for the folks who actually have access to this tool, our stock volatility box members, you can run this across the board for these ETFs, create a saved ETF file, and then still use some of the other tickers that we've talked about in tonight's video to start to build a plan around what you may want to trade tomorrow morning, knowing that you have ample opportunity for likely trending candidates. We'll also take a look at DIA. In DIA, you see something similar. Now, if we switch gear to the bonds, we'll notice something opposite, right? We have a bearish potential trending candidate here. And then finally, we'll conclude with USO. USO has been chopping just in between, even though crude did face a little bit of a sell-off today right here, which is where that volatility box entry and stop came. However, in tonight's video, we're going to focus on the bonds, the Russell, and then some potential likely trending candidates for tomorrow. If you want more information, you can also take a look at the post associated with today's video, in which we cover some more detail about not only the bond trade, but also potential likely trending stocks for tomorrow. And we also have this comma delineated list that you can directly plug into the stock volatility box tool to start to run an indicator file to be ready for tomorrow. But for our likely trending candidates, we have Salesforce, Google, Dynatrace, Acadia, Big Lots, and then WW. So you really have your choice between what you may like to pick if you're looking at using stock. And if you're more of a fan of trading the larger markets, then we also took a look at SPY, the Qs, and DIA in a very similar manner. Now coming back to our charts, we'll switch gears and get back to our aggressive volatility box with the futures and take a look at the 30-year bond. Now with the 30-year bond, we ended up opening while we stayed inside of both sides' aggressive volatility box, which told us that we could continue to use that same aggressive model. However, across the board in the indices, we saw that that was not the case. We had actually breached that aggressive volatility box line and then continued to drift further, implying that we should be using our conservative volatility box. The only place where this wasn't true was the Dow, where we didn't get close to breaching the volatility box, not quite there, and the Russell, which we'll talk about towards the end. But let's get back to the bonds to start to focus on the potential trade that we had there. Now, with the bonds, we had a nice sell-off between 7:30 to 8:30. We didn't come close to hitting the level in that 7 to 8 hour. However, in 8 to 9 a.m. Pacific, we did end up hitting what would have been our volatility box entry line. Now, there's two potential trade scenarios here, right? If you're an aggressive trader, then this is where you would have had your orders parked, ready to pick this trade in the bonds, knowing that you're looking to pick the bottom. And what you will notice is this was the absolute picture-perfect entry for the day in the bonds, but did require you to be a bit more aggressive. You did not have the luxury of being able to see any of our confirmation signals, since after we saw that first yellow dynamic RSI candle on a 5 or even on a 3-minute chart, you didn't really have any retest of that same volatility box entry line, which meant that you now had to take a greater risk trade. This depends on whether or not you were more of an aggressive trader looking to trade this even without a confirmation signal. For us, we were waiting for that confirmation signal. Now that second entry in the bonds came, and we've switched on over to that 3-minute chart to be able to use confirmation signals when price fell into our volatility box entry lines. Now this level is very similar to that previous level, which gave us a nice double bottom. However, this time we also had the luxury of being able to see confirmation signals. We saw the RSI candle switch from red to orange to yellow, giving us that nice follow through, and then you had another opportunity to enter at that same exact level in this subsequent candle, helping you trade this move up higher. However, unlike this trade right here, we did not hit our second target, which would have been our target line, before being stopped out at break even, right? So this is a trade-off. This was a more aggressive trade, which ended up working out today. However, required you to not have confirmation signals. And this was a far more conservative trade where you had more confidence. It was a double bottom. You had this move up higher. You still had a really nice trade, but you didn't get that second contract follow through. Now, if we switch to the Russell was a slightly different story in which we didn't have quite as many winners, right? So if we start with the Russell, we had a similar morning. It didn't breach either side's aggressive volatility box, letting us know that we could continue to use those same levels. Now, in that subsequent hour, we had our entry to go short as price lamped into our volatility box entry lines. Our stop was outside of the volatility box, and in this case, we got stopped out. And there's no two ways of looking at this. This was a straight and clear stop, but what we see after is that the Russell continued to drift up higher. So while yes, this was a stopping trade and it's never fun to have a stop out, however, we see that that stop area in the Russell did end up saving up quite a bit of points as the Russell continued to drift up higher and didn't really come close to our stop until towards the end of the hour where we fell back into what would have been an entry at that point. However, once we're stopped out here, this is then our sign to switch on over to our conservative volatility box. And if you're looking to be a bit more aggressive, then you may continue to use the aggressive volatility box, waiting for all three of those confirmation signals that we've been talking about, right? The volatility box edge, the dynamic RSI color switch, and the WADA switch, which for our futures members, we sent out that combined indicator yesterday, which we're looking at testing, which combines these indicators into one. Hopefully, today's video was helpful in helping you figure out likely trending candidates for tomorrow. Just to review one more time, we have the S&P, the Nasdaq, the Dow, the 30-year bond, along with some stocks in Salesforce, Google, Dynatrace, Acadia, Big Lots, and WW. So this list should give us a nice area of potential candidates that we should focus on, and you can determine even tonight which ones you'd like to spend some time researching. Maybe they fit your other trade scenarios, trade setups, whatever it may be, but this is the area where we'll be focusing for tomorrow morning's first 15 minutes activity. One more thing to keep in mind is tomorrow morning we do have the ISM non-manufacturing PMI numbers, and this is something that may move the market. We've seen volatility at least re-enter the markets as of the last 2 weeks. And so this report may be important, and the number is something that we'll be looking at to see whether or not the markets have started to breach outside of any of our volatility box entry lines or even clouds. All right, take care everyone, and we'll see you in the next daily update.